live, and yes, we're talking about doing backflips here. The Zoom crowd who's waiting for us to go live is trying to talk me into doing backflips to entertain them while we're waiting for you, Lab Coat Agents. Welcome back for another webinar on in Lab Coat Agents, and we are going to talk today about not leaving money on the table. What do we mean by that? Well, Tyler's going to explain, and this has become more relevant now than ever with the restrictions that have been put on the mortgage industry. So this is so relevant to you real estate agents. You've all been hearing about it. Jumbo is basically gone. Non-QM is gone. There's so many programs that are gone. Credit score requirements have been raised. Some companies as high as 640, 660, 680, even some at 700. But we're seeing it across the board. So being able to get your borrowers in a position to be able to buy homes by getting their credit scores up is far more relevant than ever. It's relevant all the time, but it's more relevant now. So let me introduce in our guest for today, Tyler Bossetti, who is a titan in the personal finance industry and a credit expert. He's got mortgage industry experience. Tyler, tell us a little bit about who you are, and welcome to Lab Coat Agents, my friend.
Yeah, thank you, Jeff, and thank you, Dan, for having me on here. Definitely appreciate the opportunity. And you know, like the title says, I think there's a lot of money being left on the table in the mortgage and real estate industry as a whole, but specifically now more than ever with just current market conditions and you know everything across the board in the industry. But just to share a little insight of who I am, like you said, I do have mortgage industry experience. I was in the industry for about 5 years, and that is here in Columbus, Ohio, where I reside. I was with one of the top companies in the entire country, and very thankful for that opportunity. But I was missing a little bit of passion in certain areas, and that is what motivated me to lead the industry and build the current company, the 0% company that I have with a business partner. And within our financial service 0% company, we focus on consulting services, funding services, credit repair, and also real estate investing. So what I've done and put a lot of time, energy, and effort into is specifically credit repair, and built our credit repair business and helped nearly 1,000 clients so far in the last 6 months, building that business out. And I think the area of credit repair and credit in general, like you mentioned, now more than ever, is crucial for realtors, for lenders, to not only understand how credit works, but how they can leverage credit to do more deals and really scale their business and help their clients.
1,000,000%. And I think a lot of people automatically just think credit repair. You know, I'm a mortgage guy. Everybody knows that. And I think a lot of people just assume that this is really more of a mortgage topic, but it's not. It's not even close to that because it really starts with you, the real estate agents. And so Tyler, who's not as familiar with Lab Coat Agents as obviously all of you are, now knows that this is about probably 95% real estate agents. And again, you guys are the front line. You're the ones meeting with these borrowers and these buyers right out of the gate and learning quickly about their situations, or you should be asking these questions. And so you're going to be finding out that, you know, with these credit restrictions going forward in the coming months, hopefully not longer than that, there's going to be some challenges. And really, one of the only ways to get over these challenges is to help these people improve their scores. So Tyler, I know you have a presentation. So if you want to kind of dive in, let's go deep on, you know, kind of what credit repair is and how, you know, companies like yourselves are helping these borrowers put themselves in a position to borrow money.
Yeah. And I want to back up again just a little bit on that. You made a great point. Most realtors, that's where I got a lot of my business is building strong relationships with realtors. So I wasn't wasting money on online leads that, you know, hardly ever convert, and spending unnecessary marketing expenses and trying to be on the phone for 12 hours a day calling these online leads. Not that they're bad, but again, relationship-driven businesses are super, super key. And agencies need to understand that it really comes down to 3 areas, Jeff. I'll leave this side to you. I've been out in the industry for about a year now, but it's really credit, income, and assets. And it all starts with credit. If credit is not aligned, then it almost doesn't matter where their income is or what assets you can verify. So it really, truly does come down to credit. And I always say credit is the foundation of people's finances. So whether your client is looking to buy a house, refinance, rent, you are bringing way more value to them by making sure that their credit is aligned, because that's saving them money down the road on their insurance premium, on their utilities, on getting a new job, potentially on high interest debt on credit cards, which is a major reason why people are literally paycheck to paycheck, is simply because of high interest debt. So one thing I wanted to mention as well, as I share my screen here, is how to actually scale a business. It's, the terminology scale is all over the place now, in my opinion. Scaling just means not having to exchange more time or money in order to produce more income. So really, if you understand credit and you have a relationship with a credit repair company, or you are more educated on credit and you can further help your clients, guess what you're doing? You are having an additional pillar to your business to produce more income without changing more marketing expense, without having to hop on 25 more phone calls to generate another pre-approved buyer to close a deal. So that is what scaling a business means, is trying to eliminate exchanging more time and money. And that comes down to understanding credit. I'm sure a lot of people on this call understand how credit works, but this is the category, how it's broken down to, and how your FICO score is derived. There's actually 10 different FICO scores. Not many people are aware about that. And a lot of people don't actually understand how your credit score is actually built. 35% of your credit is built by payment history, so making on-time payments. 30% is amounts owed. In other words, credit utilization. If you have a $10,000 limit on a credit card and you are consistently maxing that card out, or it is maxed out, you need to do your best to ideally get it below 50% or get it below 25%. And one additional tip in this area is the creditors, let's say your financial institution, Chase Bank, will report that utilization on that account on the statement date, not the due date, on the statement date. So if you can have, number one, yourself and or your clients make their payments on the statement date, that is going to reflect utilization, which is a major reason why people are not maximizing or optimizing their credit scores. The last three categories: length of credit history. A great tip is, if you have a family member, a friend, or somebody you trust that is not maxing out their cards or not missing payments, you can have your clients add themselves on as an authorized user onto somebody's credit card that has, let's say, 10 years of credit history, and your client may only have 1 or 2 years. Their credit profile is quote unquote thin. They're just now building credit, and that could easily inflate their scores, upwards of 40 points sometimes. And that can get them better on the loan. That can get them a better loan structure and ultimately qualify. And then last but not least, those other two categories: credit mix and new credit. You actually have to have 21 personal accounts in order to have a perfect credit score. Not that having a perfect credit score, I've never seen a perfect credit score after looking at 10,000 credit reports. It's just basically impossible. But knowing that having multiple cards, multiple type of accounts is actually good. And if your client goes and gets an auto loan, or they do multiple applications, get hit with what's called a hard inquiry, yes, it will hurt their scores temporarily. 10% of their scores is derived. But usually after 30 to 60 days, worst case scenario, their scores will go back up to where they were, if not exceed where they were, because you're adding on new accounts and you're adding on new mixed accounts. So just a little rundown of how credit works, some additional tips there. Any questions?
Yeah, there's a couple questions. So first one is from Kendrick, who asked, he's 2 years out of college, and he wants to know the best ways to establish credit or to build credit, which is a great question that a lot of us, we've all dealt with, or we have kids that are dealing with it. So what's the best advice you would give there?
Yeah, what I find funny is you have to, in order to go to college, a lot of people have to have student loans. But in order to be qualified for student loans, you have to have credit established or have a cosigner, hopefully a parent that, or somebody or somebody that's willing to co-sign for you to take on that debt just as much as you, in order for you to go into debt to hopefully graduate, right? Whole other topic, but I find that ironic. And the best piece of advice I would give, the best thing you can do for your credit is build your own personal trade line, meaning go get a secured card if that is the best route for you, meaning you go to your bank that you have your money at. I'm going to use Chase Bank here. And if you have $500 in your account, one, I would try to apply for a normal personal card. There's many benefits of doing that. It could be a 0% credit card that you can have for 12 to 15 months, and you use that money to cover your expenses as being a newer agent potentially. And now you are not putting that on high interest credit card. But you can also maybe get points on the card, right, to travel or do whatever you want to do. Not necessarily right now, but building your own trade lines is key. So I would recommend to go get a personal credit card or multiple personal credit cards. It's not bad to apply for upwards to 3 to 5 at a time. And you could take the advantages of those cards. And if that is not an option for you, then again, you can go with a secured credit card where you're basically having the money in your account as collateral to protect the financial institution of you building that first trade line with them, that first credit card with them. So that's what I would recommend.
It's basically like a debit card, essentially. And you're using your own money, but they're going to take it and establish credit for you.
Exactly. And if you would ever default on the payments, you decide never to pay them back. And then again, that money that is secured to that account is collateral for the bank. That's basically building trust. There's, you can report your rent. If you're paying rent, you can report your rent to your credit report. You can go to Experian Boost. You can literally just Google Experian Boost. You can start reporting your utilities. There's a lot of different ways that you can, boost up your credit. And again, like I said, if you have your family member or friend, somebody you trust, maybe look into adding yourself on as an authorized user to get that length of credit history, get that new account. And even if they had the account open before you were born, that will still, help you out, and that you're still able to have that reporting on your credit.
I love it, man. And I think, and there's been another question of about specific credit cards that you recommend. He mentioned starting with the bank where you bank at. I think that's good. But do you have any other ones? So let's just say somebody banks at a little local community credit union or a little local community bank that doesn't offer credit cards. Where would you recommend they go?
Yeah, good question. Everything, especially in the real estate and mortgage industry, in my opinion, is relationship driven. Same exact concept with banking. Almost every business, if you have a relationship, especially in banking, that can go a long, long, long way. And so what I always recommend is take a top-down approach. If you, start with the largest banks first, the grade A banks, Chase Bank, American Express, US Bank, Citibank, and then work towards regional banks. And specifically in Columbus, some of the major regional banks is Huntington, PNC, Key Bank, and then work down to your local credit unions. Because when you build the biggest relationships first, then the mediocre, mid-level, the regional, not mediocre, the mid-level regional, then you go down to the local credit unions. They can see the trust being built, and that makes it more advantageous for them and less risk for them to lend you money, AKA a credit card, a mortgage, an auto loan. All of those are categorized as credit. If you only bank at a local credit union, then you should work on establishing 1 or 2 relationships at a major bank.
Awesome. And another idea too is, and I've done this with my teenage kids, is, when we bought them cars, we would intentionally even though they couldn't qualify, I had to co-sign. Essentially, it's me getting the loan, but I intentionally put them on the loan to help establish credit. There's a lot of different ways you can do that with co-signing on whatever it is they might need, whether they need furniture for college, like Kendrick got a full ride, so he didn't even have to take out student loans. Good problem to have, Kendrick. So you can figure out going the other route, because I'd rather have yours and not having student loans.
Most people, people are scared, there's a psychological side of money and debt, right? It all starts on a psychological, mental side. And most people that are scared of debt or credit is because you're scared of what you don't know. So most people link credit cards up to, being very bad. Well, yeah, they are bad if they're high interest. They're bad if you are not producing income. They're bad if you are not having an outcome and a purpose of leveraging credit. There has to be an outcome of using credit. You don't just have good credit to say you have good credit. You have good credit to not have high interest debt, to leverage it to scale your business and income, hire employees, use for marketing expenses, buy an investment property. you use credit to produce income, and you have it for preparation. Like times right now, more than ever, getting credit is constricted. It's normal. This stuff happens, as crazy as it sounds. But if you are not credit worthy right now, guess what? Now your business may fail. Now you have high interest debt. Now you are, sinking in water, and you're not credit worthy. Those that are credit worthy right now, they are taking advantage of what's happening.
100%, 100%. And this is striking a lot of chords. So we've got a lot of questions. Let me jump through these. One person asked this a little bit ago. It says it won't affect credit utilization to pay before the statement date. That is a question.
Yeah, so there's what's called a statement date. That is when the creditor, the financial institution lending you the money, they have a statement date when they release the balance versus the limit. And here's what the minimum payment is. That when the creditor reports to the three bureaus, Experian, TransUnion, and Equifax, here is the balance and limit and the details of Tyler Bossetti's account to the bureaus, and it sends it out to those three bureaus, right? And then if you don't pay by this due date, there's going to be a late fee. After 30 days, there's a 30-day late payment. But not many people realize that it is the statement date, not the due date, when the creditor reports onto your credit report, aka to the bureaus, Experian, TransUnion, and Equifax. So try to do your best. You can literally just set up automatic payments on the statement date versus the due date.
Correct. And then going back to the conversation about Experian Boost. So if you missed that, he was talking about using like a utility or your rent and going to Experian Boost and having that apply towards your credit to establish credit. There's a couple of questions along those lines. One is actually kind of a statement. I thought you were not supposed to upload utility to Experian Boost or whatever because it makes it harder to dispute items in the future since they have confirmation on your personal info. What do you have to say about that?
Yeah. So in regards to like the repair process, which we'll dive into, it's a legality approach, right? So there's a validation and verification process. So that's definitely a really good point. But if you are not willing or able to do the items that I discussed, going to apply for your own accounts, adding yourself on as an authorized user, going to get an auto loan rather than paying cash for it, or getting student loans, so on and so forth. Those are just additional tips of ways to boost it up if there's no other option. And on my, I'm about to do a post on it tomorrow, like quick ways to like rebuild your credit, breaking down like a lot more examples.
Fantastic. And how long does it take to raise somebody's credit scores when you use this method?
Yeah, usually it's just going to report the next statement date. So usually within 30 to 45 days is always the buffer. Now, if you are just now building credit, you have nothing reporting. I'm sure, Jeff, you saw this. I saw it plenty of times where somebody is 18, 19, 20 years old, or doesn't matter about age, but majority of the time it is when they're younger and they're looking to buy a house and they don't have credit. That is what I would tell them to do. Look, you should go to your bank, set up some secured credit cards. You do whatever you want to do. But it will take anywhere between 30 to 45 days, worst case scenario, 60 days. But I would always tell my clients, if it's not reporting after the first statement date, you need to call the creditor and make sure it is reporting. There are so many items behind the scenes that are getting reported from all these creditors and all these bureaus. They can easily miss something. That happens all the time. 80% of consumer credit reports have inaccuracies. So if you just pick up the phone, call the creditor and or call the bureau, hey, I opened this account, I need this updated right now. It's affecting my score, it's affecting my life. I need this updated.
I love it. And another question here is, I don't know if this matters. Kendrick asked, when applying for a credit card, is it better to call or apply online? I'm not sure if that really matters, but what do you have to say to that?
On the business side, it does, but just to keep it simple for the personal side, yeah, you can just apply online, especially again, if it's on the personal side. Be aware, because of current lending conditions, about 40 upwards to 60% of financial institutions have algorithms built that's automatically denying or putting people's account into pending status. So one great tip is, if you ever get denied, very similar to the mortgage process, you can call and say, yeah, my account is in pending status, or I was denied. I feel like I should have been approved. can you have the writer do a manual review or do a reconsideration? You can Google the bank's reconsideration number. And that's something that we teach in our consulting group. And there's many more details behind the scenes. But on the business side, yeah, I think you should do your best to create a relationship at that bank.
Awesome. Awesome. Jason, the answer to your question is Google Experian Boost. That's where you can upload your utilities or rent to establish credit. A lot of the delinquency questions, I think he's going to get more into, so I'm going to save those for later. One more thing on credit score. Does it help improve your credit score if you pay multiple payments in a single month?
No, it doesn't. It only helps when that statement date is released. Now, it does show good activity and reassurance to that bank. So one good tip to know is, let's say you go apply and you're just now building credit and you're only getting approved for like $1,000, $2,000, $3,000. Really, it's a good sign if you have at least 1 to 3 personal cards above $10,000 limits. That means that you're very credit worthy. You have big limits on your account, which is good. You don't need this is me being pretty in depth here. But one good little tactic that we'll teach some of our consulting clients is, if you know you're going to spend $5,000 a month and you're going to pay it off every month, then you can max out the cards and then again pay it off multiple times. So it shows the banks that you're using it, paying it off, using it, paying it off. In other words, you're not relying on it. So it makes it less risk to them. And then eventually what they can do is over time bump up the limit without doing a hard inquiry pull.
Yeah, that's actually a really good point. And I want you to keep going. Alan has some specific questions about your company, but obviously you're going to cover that. But that's one way, that's one hack to increasing your credit score, is the difference in, your balance versus what your limit is. And one way that you can boost that is by calling your credit card companies and just asking for an increase in your limit. Just by doing that will increase the disparity between the two, which will put you in a better position to increase your credit score.
Yeah,
that's something I don't know if you guys talk about.
Yeah, and 2 quick things on that as well, Jeff. Yeah, great thing to do, because let's say a client has a 680 credit score. Well, their credit's thin. They have less than 2 years of age. They only have 3 to 4 personal accounts. They've just now built credit. Great tactic. Hey, we can only go FHA right now because of where your scores are, let's say. Well, if you increase your limit on your Capital One card, or in this Discover card, let's say, that's going to take your utilization from 75%, aka maxed out. And from what I can see by, doing a refresh on your credit, it's going to probably inflate your scores about roughly 40 points if you can double the limits of these cards. You've had on-time payment history, everything's looked great. And then boom, they do that. You refresh their credit, Jeff. Now you're taking them from FHA to conventional. If you're in a competitive market, or there's hazardous items and that's going to disrupt the appraisal process, guess what? You just closed another deal. You helped your client. They got a better payment structure likely. You helped your referral partner. And one thing I will say on that, though, is be careful when you do that. It's about 50% of the time. Again, you can Google this as well. There's resources on this. But there's a list of banks that will pull your credit, which could actually hurt your scores a little. And then there's a list of banks that will not pull your credit when you request for a limit increase. So just be mindful of that.
Awesome. Carry on.
Awesome. All right. So here's specifically how, this is how, having repair as a pillar of your business or having a partner help you scale your business and income is qualified leads. I'm sure we all heard it 100 times before. Leads solve all problems, but leads don't matter unless they're qualified. So I know with 5 years of experience working with, one of the biggest mortgage companies in the country, about roughly 40% of clients simply do not qualify due to credit. It starts with credit, then they evaluate income and verify assets, right? So sounds pretty mean, but hey, 40% of clients don't qualify because of credit because of majority of the time, financial issues. So I'm not saying to spend every waking moment or time, energy, and effort trying to get every 40% of those clients repair, but by simply, let's say, half of them being willing to invest in repairing their credit or willing to take the time, energy, and effort on their end to do the tactics you're teaching them, that can easily scale your business, which means now, number 2, you're not spending as much money on non-profitable leads. You can stay focused and shifted on building your organic leads. The highest converting type of lead in the mortgage industry is current and past client referrals. When I was getting ready to close a new referral partner, AKA a realtor, I knew confidently 99% of the time I was going to grow their business, because if they sent me 10 clients, let's say, and 30 days, I already knew 40% of them are not going to qualify. Now I have an opportunity to fix 4 out of 10 of those clients' credit, extract a lead from them. Boom, I'm handing my referral partner back over a pre-approved buyer, if not 2 or 3 pre-approved buyers, by helping that 40% area. So the value of that is stronger relationships. If you're a lender like Jeff and you have 100 realtors referring you business, does Jeff want to be number 3 on the list, or does he be number 1? And it really comes down to what value you bring in me, how is that helping my clients, and how is that moving the needle of my business? And then lastly is lending guidelines. Again, we've said it a few times, credit, income, and assets. Lending guidelines change, all the time. And, a few weeks back, it was like, boom, overnight, I have some of our partners messaging me left and right. Hey, this client needs help. This client needs help. So there's a pipeline out there of really probably non-qualified clients searching to buy a house, or they could change things again. So it's just good to know that arguably the most important area of getting a home credit, you have a resolution for that area.
Awesome. Carry on.
So why credit repair? Like I said, it's the foundation of your finances. It literally affects almost everything. Time and money. This is an area that I want to talk on. It's probably going to arise a lot of questions. I think answer a few questions as well. A lot of people don't realize that you do not owe money to a collection agency. And before I finish this section, I'm never telling people or ever promoting, hey, don't pay your bills. You don't know anybody anything, right? If you sleep better at night by paying that, by all means, right? But again, there are legal action and legal items and laws set in place to protect the consumer that you do not owe that collection agency company. If Capital One puts you in collections, they wrote that off on their books, and you do not owe this collection agency company. In other words, that should not be reporting on your credit. So what my team will do in particular, or what repair companies would hopefully be doing as far as their process, is sending out legal letters to validate and verify that they took the proper measures to report that on a person's report. Another great example is medical collections. I would see clients all the time where, and some lenders, they only have to take a calculation of that collection against their DTI and they can still qualify, but in their mind, their consumer is still set to pay that, or they're getting set up on a payment plan. Well, if it's a medical collection, it is a HIPAA violation to report that on a consumer's report. So if you send the proper letters over, then they need to legally remove that. It's not going to happen overnight. Every round is 30 days. So when you send the letters out to the bureaus and or the creditors, they have 30 days to respond. If they can't validate or verify the account, then they need to legally remove it. And that goes for every negative item area. That goes for collections, charge-offs, repossessions. We can get bankruptcies removed, but I'm not a huge fan of doing that unless they're outside of that time frame for the typical loan, because I'm pretty sure that the underwriter and or the lender is still going to catch it on Pacer, which is how they find the bankruptcies. I only would recommend to do that for my partners and for the consumer if they're already outside of that buying time frame, and that bankruptcy, let's say a Chapter 7 still reporting from 5 years ago, and they've only added one new account and their score is a 620. Look, we need to get this negative item removed. Again, legally, this needs to be removed off of their report, and now they need to go quickly rebuild new accounts. That could easily get their scores up to, the 700 range in 30 to 90 days. And again, how does that help? In terms of credit repair, if you yourself as a realtor have good credit, you can leverage credit to hire, to have, more marketing in terms of, flyers, signs in the yard, ads, inventory, systems and software, so on and so forth. And then preparation. So if you are up to date of what's going on with credit and have a good relationship with your lender, then that allows you to be prepared for recessions, business opportunities in case of emergency. And then the last bullet point we can ignore, that's just, regarding our company.
Awesome. Let's see here. One question. We've got a lot of them, and some of these for you folks who are on here. Some of you are asking some a little bit more personal to your individual situation. I'm going to recommend that you actually reach out to Tyler, and we'll give you his contact information at the end of this, rather than addressing those unless we have time. So I'm kind of glossing over those just as an FYI. I don't mean to ignore you, but I'm trying to keep it as broad as possible. And Tyler, you touched on this, but there's been a couple of people that have asked the question, just kind of generally speaking, when it comes to having issues in the past that have obviously damaged their credit. And you've kind of touched on this, but maybe give them just a few bullet points of what's the best way to rebuild if they've had issues in the past.
Yeah. So the first steps you should take is you need to remove all the negative items that are hurting your score. I mean, you could go add 10 new accounts and, bump up your scores 30, 40 points. But in terms of actually buying a house or having an outcome, like I say, getting a car, buying a house, better premiums on insurance, so on and so forth, those negative items are likely going to still be hindering you. Even if you paid it off, a lot of times people will try to negotiate a collection or negotiate a charge off or something and get set up on a payment plan. And they may even get an email from a manager stating that they'll remove it after they pay, or they'll remove it after the payment plan is completed. About 5% of the time they'll actually do that. And so what I recommend, again, is to get all of those negative items removed first, and then again, rebuild your accounts. You have to go get new accounts. Again, I love using the bankruptcy as an example. They had a bad experience with debt. They had a bad experience with credit. So what do most people do that had a bankruptcy or a negative history with debt? They never go get new debt, right? Your credit and your Fico score is really just a report card of your finances. So they don't care about your past. You just need to get it removed, and you need to build and rebuild trust. Really, banking comes down to risk versus reward, and how they manage that risk is from your credit report. So first step, remove negative items. Second step, rebuild new accounts, credit cards, student loans, auto loans, whatever you need to do to rebuild, those different type of trade lines.
It's a good thing. And one thing to point out too, that we've run into in the past is that when somebody has a collection or they have something, a medical collection, any kind of collection on their credit, and it's been just hovering there for years, right? And you go and you think, well, I'm going to do the right thing. I finally have the money. I'm going to go pay it off. You think you're doing a good thing, but the reality is you're paying off a negative account. So now that negative account is going to re-report, which is actually hurting your credit and not helping it. Tyler, what kind of advice would you give to somebody on that? So let's just say they have a $250 medical collection and they're like, you know what? I want to get this damn thing off my credit. When in actuality, it's not hurting their credit anymore. The damage was already done. But then when they pay it off, it actually re-reports and now re-damages their credit. What do you say to that?
Yeah, really, really good point, Jeff. That is super common, very, very common. So like you said, FICO, the algorithm that derives your credit scores, it is activity-based, meaning whenever there is a payment or any type of activity going from good status to late payment, anytime there's activity, that's going to refresh on your credit report. So if there's a $250 medical collection from 3 years ago, and Tyler decides to go, okay, you know what? I have the money. Let me just pay it off so it gets removed, right? 95% of the time, even if you call them, even if you negotiate, even if you have an email, even if you have a letter verifying it, I go pay the $250 medical collection. Boom. Now the creditor, AKA that collection, will report to the bureaus. It'll be shown as a $0 paid collection, but it's still going to be in collection status, still hurting Tyler's credit report. And they may do what's called a pay to delete, but in my opinion, it is not worth to take that risk. Even if you have a letter, even if you talk to somebody on the phone, it is about a 5% chance that is actually going to happen. The only time that I completely remove myself from the situation is if you're getting sued or if you have garnishments against your wages. That is when I say you should probably go talk to a lawyer. Once your lawyer and you discuss the next measures, then I can come in, because I don't want to, assert myself in that situation. But does that provide some clarity on that question, Jeff?
%. What is they're full of, so don't, because in more than not, actually, this baby 20 years of, and nothing ever happens.
Hey, Jeff, I don't know if it was my computer or my Wi-Fi, but I think you kind of cut out just a little bit. I missed you there about that.
Yeah, it was Jeff.
Okay. That was me. Sorry, Tyler, go ahead and carry on.
Yeah, no worries. But that answers your question, right, about paying items off?
Yes, absolutely.
And one last thing I'll mention, because I know we're on a time constraint on that, is, it's a fine line. It's like, I don't want people, and I don't want my partners ever to miss out on a deal, because I know lenders may ignore the collection, so on and so forth. But it's just good to educate your client. Hey, you mentioned you were going to pay this. You do whatever you want, but know that you don't have to pay that. So in reality, they're saving hundreds, if not thousands of dollars from the very beginning, let alone qualifying for the house or saving money on a better loan structure, so on and so forth. So that's just one thing I wanted to mention. As far as the type of services, here's the three, really the two most common type of services. The last one is something that we have done on our end, but the first service is a sweep service, which is where there is removal of all derogatory remarks, bankruptcy charge-offs, repossessions, late payments, collections, hard inquiries, student loans, again, all negative items that are affecting a consumer's report. And then just specifically with our team, it takes us about 30 to 90 days. Worst case scenario, up to 120 days. And the reasoning why, obviously I would like to get client files ready to go in a day if I could, but there's actually legalities throughout the dispute process and making sure that you send out the proper letters. And certain items, it doesn't matter if you send out the proper letter the first time. Legally, there's some accounts and some collection agencies and some creditors that require you to send it out upwards to 120 days. That basically, they know you're not going anywhere. You're not going to stop. So that's why they remove it. And they know that there's nothing that they can legally verify or validate after that step. The second service is a inquiry removal service. This is removing hard inquiries. The only ones that really matter are the ones within the last 12 months, because those are the inquiries that only negatively affect a consumer's credit report. After 24 months, hard inquiries automatically fall off your credit. And what a hard inquiry is when a financial institution, let's say Jeff is doing a loan application and getting ready to pre-approve his client or to structure his loan to move along the processing for underwriting and whatnot. They pull your credit to make sure they can access the three bureaus, and that's going to hit the three bureaus. It in most cases only hurts your scores 3 to 5 points. It's not the end of the world. It's going to come back up in 30 days. And again, the reasoning why we get those removed is somebody may have 20 hard inquiries from going to Honda Financial to get a new car, and that dealership is looking out for their best interest to get them the best terms on the loan, but they just pulled their credit 20 times with different banks. Well, if you didn't finance it through those other 19 banks, legally they need removed. And for business hard inquiries, business credit, whether it's a credit card, line of credit, or multiple different products you can get, business credit and utilization, super key to know, does not report on your personal credit. So if one of my consulting clients will go get 7 new business credit cards, they'll have hard inquiries on their personal credit, but we can remove those inquiries because they can't validate or verify the account is attached because it's not reporting as open. The only time business credit reports on your personal credit is when you default. And that's when it'll start reporting. And then lastly, this is just like a do-it-yourself module. It's a digital course I put together, just sharing, a step-by-step process to repair their own credit, how they communicate with the bureaus, so on and so forth. I give like 165 dispute reasons and 25 letter templates. One additional resource I would give is, if people are not willing or they're just not unfortunately able to invest in repairing their credit, a great resource is called cfpb.gov. And I can show what that looks like here, Jeff. Let me see here. So what cfpb.gov is, it's a free website that any consumer can go to. It was literally built after the housing market crash. It's the Consumer Financial Protection Bureau. It was created to protect consumers, aka you and I, from large institutions, aka banks. And you can go here and let's say we have a client that does have $1,000 medical collection, but they can't afford or they're not willing to invest into a repair company to remove it for them. They can go to this website, click submit a complaint, and they can go through right here, hit start a new complaint, and they can go through the process of starting their own complaint, right? Or a great example, if you had a credit card that went to, they said you had a 30-day late payment, but you had automatic payment set up, then that's a complaint that you can send out. And legally, going this method, they have 14 business days to provide you with a response. And if they don't respond with an update on your complaint, the creditors and the bureaus can get hit with a very hefty fine. So majority of the time they are giving you responses in a timely manner. So this route and this method, I would recommend for those that may not be able to afford or not willing to invest. And the method I would do for, let's say, the other 20% of the clients that weren't able to go with the repair company.
Awesome. What I want to do here is we've got a lot of questions that we're not going to be able to get to. I do want to ask one, but I want to mention once again. So if we didn't answer your question, we are going to give Tyler the opportunity. And if you have a screen where you can share the best way for someone to ask you questions, please share that, because I think people are interested. They probably want to learn more. Some people had some very specific questions and we want to give them that opportunity. But there's one question that I think that is really relevant to the times, which is, will there be any special considerations for COVID-19? In other words, if they had any late pays as a result of this, will there be special considerations, or is that something that we probably shouldn't even answer because it's going to be very specific to the company that they might have gone late with?
Yeah, exactly. There's been some major companies like Capital One, AT&T. A lot of these companies are preparing. I also know there's a massive liquidity problem in the mortgage industry. So there's going to be some major updates coming. I think we're just at the very beginning of it all. But yeah, if you can show proof of, financial distress, a great letter to send out, sometimes in the first round, it's called a goodwill letter. Hey, look, I just lost my job. I've had a relationship with you for 6 years. Here's what happened, so on and so forth. Again, it's called a goodwill letter. But I foresee that the FCRA, that makes up the laws and rules and regulations with credit, to roll out some new laws. So I have my team consistently daily doing research to make sure that these laws are in our letters. But yes, that is something that will absolutely, happen. It's actually in the works right now, something that you can take advantage of.
Awesome. And as far as like past due accounts and getting them removed, is there any like statute of limitations on time frame on that, or is that something that you can essentially dispute or go to have removed at any point in time?
Yeah. So really, no. You can get negative items removed, but the bureaus have a statute of limitations. They have 30 days to respond. And one thing I recommend is to, I'm sharing, some key secrets here, but I never dispute with the actual creditor, dispute with the bureaus. They're the one that's actually reporting on your credit report. Chase Bank is not reporting your credit card. They're sending the information to the bureaus. So we go after the bureaus to make sure that they are legally doing the proper measures to report accurately. That's why you could just go through your credit report now and see, oh, that's weird. Experian reported it on the 1st. Equifax and TransUnion reported it on the 4th. legally they need to be reporting all on the same day. And that's just an easy, very simple example. So that is why we give, we call it each round. Each round is 30 days. We'll send the letters out today. That bureau has legally 30 days to validate and verify that account. And sometimes we're not even saying that, Mr. Smith had late payments on his auto loan. We both know that there were late payments, right? He does, the creditor does, but there's certain legality measures that they have to do to notify the consumer as well. Show me what document he signed that he confirmed this late payment, right? There's so many behind the scenes layers to that.
Awesome. Any good advice on where, so we talked about in the beginning. So again, let me reiterate to some of you, you've asked questions that we have covered. So this is available as a webinar. All webinars on Lab Coat Agents are always available to go back and rewatch in Lab Coat Agents. Also, all of these webinars are always uploaded to the Lab Coat Agents YouTube page, which Dan has put into the chat. Dan, if you can add that again into the chat, just so you guys can subscribe to the Lab Coat Agents YouTube page. You can always reference this stuff. One question that we haven't really touched on, though, is what is the best source for obtaining business credit from who and where?
Yeah, so one question I think you might have just got is like rebuilding credit. Yeah, I think just keep a lookout for my Instagram too. I'll be posting something on that. I have some, saved highlights as well, giving some information on that. But as far as building business credit, yeah, that's a different ballgame. That is actually what's called a paydex score versus a Fico score. And again, those accounts don't report on your personal credit. So you're not only eliminating your personal liability. Let's say you buy an investment property and your tenants are trying to sue you. That's done through a business entity such as an LLC. So that tenant is not suing Tyler Bossetti, they're suing my business. And something happens, I can, vanish the LLC. I can dissolve the LLC, let's say, right? But as far as credit's concerned, you can get to a point where you're also getting non-PG products, non-personal guarantee products, where you don't have to pull your personal credit in order to get qualified. And, thankfully I know how to do that. And that's how I've been able to do quite a few real estate investing deals, as well as leveraging business credit. Same concept on the personal versus the business side. Start with the big relationships, the major banks, work down to regional, and then work down to local credit unions. They're going to lend based upon the revenue of your business. So again, I would recommend starting with the major banks, regional banks, local credit unions, and repeat. If you can't pay off that debt, balance transfer it to the next one. So that's why we start top down. Start with the major banks. Okay, Chase Bank, I can't pay off this $15,000 0% business credit card. The property's not flipped yet. Okay, no worries. The 0% APR is over. Let me balance transfer it to my regional bank here at Huntington. Can't pay it off for another 12 months. Let me balance transfer it over to my local credit union. After about 3 to 5 years, you should probably not be using credit. You need to use that credit to produce income.
Right, exactly. And one thing I will mention to you all as well is any of you, if you do not subscribe to the Lab Coat Agents podcast, it's a good time to mention it. We actually did a podcast. It was episode number 48 with Stephen Wibble, specifically about establishing business credit. So go check that out. It's episode number 48. It was back, I think it's about the end of the year in 2019, but go check that out. And then of course, Tyler, again, mention where Dan put a link, I believe, to your website. But can you let the listeners and the viewers and the audience know how can they get a hold of you? And if they have specific questions that we didn't answer, please, how can they direct those questions to you so you can help them?
Yeah, absolutely. So, if you guys need help with your credit, there's a few different ways. So number one, this is where we partner with lenders and realtors. So this link right here, I just shared that with you, Dan, earlier. So I think you have that there.
Yeah, you shared it.
Okay, cool. I just go over, a brief presentation on here, the benefits, kind of explaining more in depth of how the partnership program works. They would schedule a Zoom call with me. I break things down more behind the scenes, give some information about credit, so on and so forth. I explain the repair process as well. There's like an animation video on here, just giving some details. And then, again, they can schedule the call right there. Quick Zoom call, break everything down. If they're looking to actually use our services, then there is a second link. Dan, you may have a link as well, which you're obviously welcome to share. But here is a link where it breaks down from a client, a consumer perspective. So we have the partnership link, and then we have the consumer. You're actually looking to repair your credit, or your clients need to repair their credit. So this is the second link, pretty similar information here, explain the repair process. They would, click here, start repair today, see the different services, so on and so forth. One thing I wanted to mention, again, this is not me trying to, keep talking about our company, but there's benefits to, if you are actually looking to refer clients, to hop on a separate call. We won't talk about that, but I can break everything down, walk you through literally the step-by-step details, how it's streamlined, no cost for you, and win-win for everybody. So, or lastly, just message me on Facebook, message me on Instagram. It's at Tyler Bossetti. I go through my DMs at least twice a day. So
awesome. Yeah, get the spelling of his name there. It's Tyler Bossetti, Bossetti. Check that out. Tyler, this has been fantastic. Tons of great information, even some questions we couldn't even get to. So I hope you guys do go take advantage of that. Reach out to Tyler. Obviously, he's an expert in this field, an awesome resource. And this is more relevant now than ever. Actually, it's funny, Tyler, I believe that a lot of these questions, in some cases, I'm totally guessing here, reading between the lines, but I think a lot of it was personal. Like people were asking for their own personal use. Whereas I came into this thinking, well, let's talk about our clients and helping our clients and getting more people in a position to buy. But this is fascinating that obviously this affects all of us. And it's really important to understand and know this stuff and learn this stuff. So take advantage of these great companies like 0% Mazzetti, because he's doing some awesome things for the industry.
Yeah, thank you, Jeff. I definitely appreciate it. Like I said, credit's the foundation of your finances. And unfortunately, we're not taught this stuff in school. And if you're not educated on it, then it's very difficult to be confident to educate your clients and to make them feel comfortable. Buying a home is a big deal. It's a big purchase, one of the biggest, if not the largest investment they'll ever make in their life. So if they're not comfortable with that, then, you are not being able to provide more value. So
I love it, man. I love it. Awesome. Well, good stuff. Thank you guys for being on today. And again, you can watch this, rewatch it in Lab Coat Agents or on our YouTube page. Tyler, thanks again. And we'll hope to stay in touch.
Absolutely, Jeff. Thank you so much. Thank you, Dan. You guys have a great week. And thanks everyone that was on this recording.
Take care, brother.
All right.